Hey everyone, AMarkets traders and AMarkets partners, welcome back to the YouTube channel. In this video, we will learn about a very important topic, trend trading, a simple model. There is a saying in the market, trend is your friend. If you follow the trend, 90% of the trading problem will automatically solved out. Yes, this is true. If you have ever feel that, how do professional traders ride big market moves? How can I avoid trading against the direction? How do I identify the trend of the market? Then this video is for you. So first of all, let's understand what is trend trading. Trend trading means trading in the direction of the market. That means what? If price is following a downtrend, then what you need to do is just follow the downtrend. Just trade in the direction of the downtrend. If price is following the upward trend, just trade in the direction of the upward trend. That's it. That is what the trend trading. Now the next is, there are three types of trend in the market. One is upward trend, one is sideways trend, and the another one is downward trend. So if you follow the trend, if you spot the trend, majority of the problems will solve out. Majority of the traders or investors not able to make the money in the market because they are not having a trend context. They don't have the idea whether what kind of trend is going on in the market. Majority of the people trades against the market. They don't trade with the direction of the market, as it is very simple and effective, but still they used to trade against the direction of the market. So next question is, how to spot the trend? If you understand this approach, 50% of your trading problem, 50% of your trading work is done over here. So once you understand the direction of the trend, the next thing is to wait for that trend, to wait for your opportunity, to position yourself, and then next is your work is done. So the question is, how to spot the trend? For to spot the upward trend, what we need to do is just we need to follow the price. If price is following a series of higher highs and higher low, that means what? Upward trend is going on in the market. So if you see this is the first low, obviously this is the first high. Now the next is price made and another low. See, price made another low. So now we need to wait for what? We have two low and we have one high, so we need one more high is this. As and when we spot that higher highs and higher low, your work is done. It means what? That upward trend is going on in the market, or we can say that potential of upward trend is there in the market. That the potential, what is the right what? Because what we need to follow is one more high is required to confirm or to validate your trend. So what over here we are having two highs. To confirm or you validate your trend, you required one more high. This is not written anywhere in your any textbook. This is we are saying from our experience, from my experience since 12 to 13 years of my experience, I am saying this, right? So as and when you spot this, there are two highs and two lows, higher series of higher highs and higher lows, your work is done. It means what? You have spotted the upward trend. Contrary to spot the downward trend, what you need to do is to follow the price. If price is following a series of lower highs and lower lows, if price is following a series of lower highs and lower lows, then you can say that the downtrend is going on in the market. So over here we have this. See this lower high and lower low. Now your work is done. What you need to do is just wait for the price to retrace back or to price to break the low to enter your trade. This is how most professional traders used to enter their trades, right? Now next one is sideways trend. How to spot the sideways trend? If price is oscillating between two highs and two lows, see this is the first high, this is another high, and this is the first low, and this is the another low. If price is oscillating between two highs and two lows, it means that price is trading in a sideways trend. So if you are a directional trader, over here you should not trade any of your trades, because majority of the trend traders lose their money in non-trading market, or we can say that sideways trend. So it is very important if to spot the sideways trend. Once you spot the sideways trend, it's very easy, and it's very important to stay back from the market, or to stay away from the market, or wait for the right opportunity, or wait for the price to break out or break down the price resistance or support. So as example, in this example, we are following the downward trend context, so we need to wait for the breakdown of the support. So as and when price is breaking down the support over here, we should enter our trade as a trend continuation method. So it's very simple that there are n number of methods to filter out the trend, but it is a very basic and very effective method. If you are following this, and if you have a practice on this, if you do a good hands-on practice on this particular basic method, definitely it will help you in the long-term game, right? So now it's very important, and it's very important for beginners, or we can say that intermediate traders, how to spot the trend without any of this for drawing a lines and all, right? So we are using a simple moving average. We are using a indicator to spot the trend. So if I wanted to spot the medium term trend, so what I can do is I can plot the 50 simple moving average on the chart. So as and when price is trading below the 50 period moving average, for me, my work is done. It means what? For me, downtrend is going on in the market. If price is trading above 50 period moving average, for me, work is done, that price is trading in a upward direction. So this is how you can filter out the trend. So see, you can use n number of averages, right? You can use crossover for the trend filter purpose. Generally people use crossovers also. So let me show you crossover method also. Let's take one more average 50, and let's take another average of 200. This is a golden crossover or death crossover. So let me make this color of 200 average as a black, right? So as and when you see you spot that 50 period is crossing above 200 and price is trading about the same, for me it's very simple to spot the trend that price is trading in the upward direction. If there is a 50 period is trading below 200 period average, and if price is trading below the same, for me work is done, that downtrend is going on in the market. But yeah, it's not very effective method. So majority of the time, if you wanted to filter out the trend, you can use simple one moving average, or you can use trend line method, or you can use simple basic method, spotting a higher highs and lower highs and lower low, right? So this is how you can spot the method. Now I'm showing you one more method of spotting the trend, filtering out the trend is you can use a trend line method. So over here we can connect the 2 points. How to spot the trend line and how to connect the trend line, draw the trend line is already this video is there on YouTube channel. Just you need to track the same, right? So just connect the two higher lows, and you can click onto the setting and extend it as or extend the right line. So as and when price is trading above the particular upward trend line, we can see that upward trend is going on in the market. So see that price is continuously trading above this trend line, so we can conclude that upward trend is going on in the market. Same like downtrend, we can use for the downtrend also. So just connect the two lower highs for the downtrend, and you just extended the right line. So see that price is trading below the same, we can conclude that a downtrend is going on in the market. So there are multiple ways to draw the trend line and to adjust your trend line. So I'm not explaining this in detail, right? So once you spot the trend, now the next very important question is how to exploit the opportunity, how to position yourself in the trend. This is the last step and last point that we are discussing. So first of all, what you need to do is spot the trend on a higher time frame. So as and when we are spotting the trend on a higher time frame, so we are taking an example that on a daily time frame, a downtrend is going on in the market. Once you spot the trend on a higher time frame, just mark out the resistance area. Why we need to mark out the resistance? Because for the downtrend, we need to mark out the resistance. For the upward trend, we need to mark down the support areas. So we have marked the support and resistance. This video is also there, how to mark the support and how to mark the resistance is there on YouTube channel. You can track the same, right? So we need to mark the resistance and support on our chart, on our higher time frame chart, right? So we mark this as a resistance and support. Now what you need to do is just wait for the price to retrace back to that point, right? So we are marking one more resistance over here, see, like this, and you just need to wait for the same price on a lower time frame. So you need to wait for the price to retrace back to that zone on a lower time frame. So we have marked three different resistance zones. Now we will wait for the price to retrace back to that zone. So this is the first point, see, first zone, right? So as and when price is retracing back to that zone, just you need to wait for the reversal bar or reversal chart pattern. So there are n number of reversal chart patterns and number of reversal candlestick patterns. So we are not taking that all these patterns. We are randomly taking any of the pattern. So see that over here there is a shooting star, which is a bearish reversal pattern. Also there is a triple top formation. This is a bearish reversal chart pattern. So you can take any of this. So over here we are taking an example of what? Shooting star candle. So once you spot the reversal pattern, you can merge multiple confluence over here. Example, you can merge a Fibonacci retracement, you can merge any sort of divergence, classic bearish divergence. Obviously for the short trade, you can take a classic bearish divergence example or hidden bearish divergence example. You can take an example for the confluences, moving average or pivots or Bollinger Band. You can take any of the method, right? Or you can take multiple methods also. So we are taking that we are seeing that there is a shooting star pattern. Now we are adding an oscillator over here, and we will see that whether there is a divergence or not. So if you see that there is a clear classic bearish divergence on this particular time frame. So there is a classic bearish divergence also. There is a shooting star candle also. As and when price will break the low of the shooting star candle, we will enter the trade considering the low high of the shooting star candle as our stop loss, or maybe the recent swing high as our stop loss. So in this case, a recent swing high and candle high is both the same. So we are considering this as a stop loss, and definitely we will ride our trend. So this is the beauty of trend trading method. Trend trading is a very simple method, but if you master this, definitely this will give you a crazy edge in your trading career. And also you can fit in your any of the trading strategies and you can take the benefit of the same. So now we are summarizing this. What you need to do is, first of all, identify the trend on the higher time frame. You can use for the filter purpose any of the method. We explain you 2 to 3 methods. Then wait for the price to retrace back on the lower degree time. Once you identify the trend, mark out the support or resistance on that particular time frame, and then wait for the price to retrace back towards that resistance zone or support zone on a lower degree time frame. And then the third step is wait for the reversal bar or reversal chart pattern to form, and you can use multiple confluence over there. And as and when entry signal is generated, you can enter the trade, and definitely you will enjoy your trade over there, right? So how to keep a smart stop loss, how to ride the trade in a most effective manner, how to trail your stop loss. If you want this sort of videos, you just need to comment and you just need to like the video. I hope you enjoy the videos for this kind of updates and videos. Stay updated with the AMarket. Thank you. Bye bye.